All right. Good morning, everybody. Hope you're having yourselves a fantastic start to the AM here. Just a quick little mic check this morning. Have a new microphone kind of rocking and rolling here. So let me know if it's working fine, if the sound is fine, all this kind of fun stuff. But hopefully this is the last thing I needed to replace. And yeah, hopefully sounds good and we're ready to go. A few things here this morning, right? It is FOMC day. So obviously anticipating it to be maybe a little bit more of a kind of choppy and slow and I don't know, maybe not the most fascinating trading day here. Generally on FOMC day, right, ends up being kind of a slower, wackier, whatever you want to call it, type session. And generally not one where I want to be super, super busy. I think if I think back to sort of FOMC day here in general, historically, it's a day where it's very easy to get like caught up in the chop, right? Where you're anticipating some volatility, markets maybe just don't move a little bit, right? Until sort of that data drops in the afternoon. So that's definitely something to kind of keep in the back of my mind. I think to a certain extent here this week, I think I'm sitting on like 14 trades here already, which is probably a few more than maybe I should have taken. Yesterday I put together that review video. And looking back at it, right, I think there were probably 2 trades there yesterday that I shouldn't have touched. And I think today, right, it's going to make a lot of those trades seem even more appealing, right? So, in days where you're expecting choppy price action or choppy conditions, tends to want to introduce, right, some more kind of challenging, we'll call it setup triggers. I'm not sure if you guys had a chance to review yesterday's kind of recap video. I think it was about 20 minutes long. I created a separate channel there in the Discord for it. We're going to be calling that Daily Trade Recaps. And yeah, if you guys have any feedback on that or anything along those lines, please let me know. We'll be trying to create those videos here on a daily basis and kind of showing you guys effectively how I'm just sort of like reviewing my trading, how I go through some of those processes, and then making sure I show you guys my execution so that there's no ambiguity, right, over, how things went. So yeah, let me know if there's any feedback there or anything that maybe was missing in that video. I think, like I mentioned yesterday, it's going to be a little bit of a learning curve from me, right, in that context. And I want to make sure, right, that I'm doing that basically as quickly and efficiently as I can. And so if you feel like you want something added to that, please let me know. I'll make sure to sort of add that to my workflow. Besides that, kind of a mixed start here to the week so far. I think some good, some bad, some good momentum created, right? And I feel like I've definitely improved both trading days here so far. Monday felt maybe a little bit of a whirlwind. And yeah, hopefully, right. We're kind of back to normal here a little bit and kind of back to standard. From a personal perspective, I'm starting to get a little bit more used to the wake up times. And starting to kind of figure out a little bit of a routine here around becoming a West Coast trader. So we'll see how that kind of works out here in the next little bit. But I do have to say it's given me a lot of extra respect. I think it's probably the right term for the traders who have been West Coasters for their entire careers, and it's definitely intense wake up time. So love it, right? It's really nice to be done the day when everyone else is kind of going into work. But that 5 o'clock or 5:30 wake up, that's something to still get a little bit more comfortable and confident with. But figuring out my flow a little bit, figuring out my timings a little bit. So we'll keep getting just a little bit better here every single day and kind of keep finding that rhythm and that flow. All right. So, yeah, I don't have too much else to kind of rant and rave about here. Maybe that's one of the byproducts of the early wake up call. I don't have time to sit and think about what I'm going to talk about on the stream here each morning. But yeah, excited for today's trading day, and let's kind of get after it a little bit. So first things first, right? Obviously, we've got FOMC here today. That's at 2 p.m. So 11 Pacific. Going to be, I mean, it's always the most important Fed meeting of all time since the last one, right? That's always kind of how it's positioned, at least these days. So definitely a little bit interesting. We've got crude oil inventories here this morning at 10:30. So just a lot of, we'll call it like headline risk here today. That could complicate things here quite a bit. And we want to make sure, right, that we're basically just not getting caught up or chopped out in those headlines. Generally, right, on FOMC day, you get more of a positioning trade than you do a trend day or trend trade. And I'm looking to see if we can get basically that nice little move and run. Almost call it like hit and run tactics here today. And I think if I'm trying to be relatively objective, or if I'm trying to like look ahead to maybe what would be the most successful way to trade here, it's going to be really about being aggressive and taking a chunk out of the middle instead of swinging for, tops and bottoms, right? So it's going to be a day where I'm going to want to be effectively like, and I'm going to say this loosely, but like a scalping type environment, right? Where really focusing on closing my trades here as my P&L is increasing and looking to take advantage of those types of opportunities. One thing that was really obvious to me yesterday, and maybe like kind of cemented a little bit of a pattern for me yesterday, but if I'm thinking back to some of my like biggest wins of the year, or maybe not biggest wins, I would say my best trades of the year. So let's remove the money out of it. My best trades have been like a little bit later on in the morning. So kind of those like early rush trades. And I mean like early rush, like opening 30 minutes. I have to have wider stop losses. I have to account for more volatility, and I'm dealing with more fake outs effectively, right, in that time of day when I'm able to let the market settle in a little bit, and then, find those really tight risk reward ratios, and even get like the 6-point stop losses right on NQ, like we had there on our last trade yesterday. That actually makes it a lot easier for me to be successful and for me to be a green trader. That 6 points of risk allows me to go larger position sizing as well, right? And I need a smaller move to make a larger payout. And by the time that those moves are kind of in play, it's almost like the shake and fake volatility is almost like evaporated from the market. And it gives me just a cleaner runway to trade with. So to a certain extent here, I think that's a little bit of what I want to put some energy and focus into. I think that creates a scenario where my position sizing kind of really works for me. And it gives me, a lot of upside here to be able to build into or work into some nice sized positions. So that's definitely something that I want to kind of keep a focus on and keep kind of some energy towards, especially when I feel a little bit like I'm maybe over trading here just a tad, right? Especially yesterday, I felt like I took 2 trades there that I shouldn't have taken. And if I can avoid that action, I think that puts me in a situation where, it's much easier to kind of stack up those green trades. So just letting the market almost like settle into its rhythm and then finding those appropriate kind of shots, I think is maybe something that I need to focus on here just a little bit more. And that's going to be my emphasis here going forward. I do think that one thing that I maybe I'm a little bit out of balance in to a certain extent is just like I'm maybe not necessarily being deliberate enough with some of my entries or with some of my trades. And I almost like want and I want to be careful how I phrase this because I don't mean this in like a negative way, but there's a certain element of like wanting to perform on a daily basis, right? Be entertaining, take a lot of trades, right? Get a lot of action and have a lot of kind of joy with sort of the team in general. And that's great, right? When you have highly, like when you have trend days, right? When you've got like really big moves, when you have those types of conditions. But when we cycle out of those opportunities, I think that creates scenarios where it becomes really frustrating to potentially watch me trade. And that's kind of a crappy place to be. So I want to balance those like self-imposed pressures on myself here to a certain extent and find like more opportunities where I have asymmetric upside and more opportunities where the probabilities kind of stack up in my favor here in general. So what I think that means, right, is probably just slowing down my trading here just a little bit, and trying to feel or not imposing pressure on myself where I have to show you guys a trade every single day. I have to take action every single day. Otherwise, you wasted your time watching the stream. I want to get away from those types of sensations or emotions or pressures that I'm imposing. I think those are ones that I'm simply just imposing on myself. I don't think that's the reality. I don't believe that's what you guys think. And as much as, the stream can be entertaining, that should be a byproduct of just watching good trades, right? Of seeing good action come together, of kind of consistent, clean, repeatable PA. And so I want to put my energy and my focus into that. I think that's kind of like a good, it's May 7th, so maybe a little bit late for a New Year's resolution, but we'll call it, something that I really want to focus on here as a trader. Definitely something that I see as kind of like my own little demon maybe that I have to overcome. So, okay, rant did actually end up coming through this morning, so maybe it just shows up a little bit later. But with that being said, let's kind of start mapping things out here this morning, right? Let's kind of figure out what we want to do here today. And let's put ourselves in a situation, right, where it's easy to be successful, where it's easy for us to have some joy, and hopefully, right, kind of finish off the morning with a really nice kind of green day. So first things first here, guys, what's the count here on ES? Let's start there. And then, let's kind of figure it out. So ES, where we at? How do we feel? Let's figure it out. Yeah, 2 out of 3 here to the downside with volume. Now, yesterday, right, probably the thing that we need to be aware of, right, is we still didn't break out through that Friday range, right? So we didn't make a lower low under that, say, 600 area. And pre-market, right, we've not been able to bounce through that range. So although it is technically a 2 out of 3 here to the downside with volume, it's not exactly a strong indication of trending price action, because if bears were strong, it would have been able to, tick past, right? It would have given us that extra 4-point move and broken down through that 600 barrier. So definitely want to be a little bit aware of that here this morning. And I think it's still reasonable to basically maintain two-way tape here, or two-way flexibility, at least until, right, those lows are broken down. So we're going to call this a 2 out of 3 to the downside with volume, but needs to break down under Friday's low. And so until that happens, right, we're kind of anticipating consolidation until we get a sort of proven otherwise type environment. So let's start with the downside story, right? 5,600 is going to be our starting point here. We should be able to map out those levels with the opening range. And then we're going to be targeting 5,590, yada, 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 all the way down towards like 5,450. That's a pretty big move. So maybe we'll go like 5,500, right? Maybe as our starting point. Again, not expecting that size move necessarily here this morning, at least not pre-FOMC. But if we can get some nice momentum, I won't complain here too much about getting some nice downside follow through. To the upside here, we're basically targeting pre-market highs and then Friday's high. Again, right, just looking for a resolution away from those areas or away from that range. And we're at what? Pre-market high is going to be 56.90. And we're at 56.30. So I don't know if I need to actually change these levels here too much. They pretty much look spot on the same. So I'm going to continue to focus on basically just looking for a strong scenario here. I don't think I need to change any of that prep. All right, NQ, similar, not so similar. How do we feel? Do we maybe have a slight difference here in those pre-market conditions? What's maybe the difference that's sticking out here? What do we think? Any thoughts? Any thoughts? What do we got, guys? What do we got? All right, so it's still a 2 out of 3 here to the downside with volume. The difference, right, on NQ versus ES is that it made the lower low, right? Now it didn't hold the lower low, so again, we've got some reasons to maybe be a little bit pessimistic about the, call it like blanket strength here of the index. But it did kind of crack, right? So maybe starting to show us signs of it's like back breaking here to a certain extent. Again, it's a 2 out of 3 to the downside with volume. The volume here, not exactly impressive. So again, I think it's reasonable to maintain a little bit of flexibility here in either direction. Because again, same thing like we talked about on ES. If bears were actually strong, they would have been able to break down through that low of day. If bears were actually strong here, they would have been able to hold under, right, that previous low of day. And so we didn't accomplish that there necessarily yesterday. And so there's kind of a story in place, right, where bears could have failed or bears could have lost, or they are maybe showing us a sign of weakness. And so there's like it's up in the air, right, basically who's winning or who's in control. So optimistic, right, that there could be some action here today. But again, want to be a little bit patient just to make sure that we're confident that one side has clearly taken over control prior to us being particularly aggressive. To the upside here, we're going to be targeting 2100, right, as kind of our starting point here. To the upside, it's about 200 points away from where the current implied open is. So plenty of space, right, in that context. And then to the downside here, targeting a move towards 19.7, right? I think, right, it continues to kind of be in play. So, 19.7, 27.50, right, kind of is yesterday's low of day approximately. So it's round that down towards 19.7. Again, our opening range should probably get us a fill or a target towards like that 19.8 area or so. So again, we have this relatively well mapped out, and levels aren't changing, right? Because we're not getting any separation, right? Either to the upside or to the downside. So maintaining that flexibility still sort of remains key here. And let's see if we can see a strong element of momentum showing up, kind of give us some conviction, right? That we've got some clean and strong price action. All right, so CL here today. It's got crude oil inventories at 10:30. So historically, not something that I trade on crude oil day or on inventories day. So I want to be a little bit maybe patient with this. We're going to call this a 1 for 3. With data at 10:30, right? So again, reasons to be a little bit patient here. And go like 60-50 to the upside and then to the downside. And we'll say basically going down towards like 57. So we're at 58.90. So we'll call that like 58, 57, 50, 57, and then down towards sort of like 55. Oops. Yeah, 56, 50, 56, 55, 50. So that's plenty of room. Again, can be a little bit patient here just to make sure that the data doesn't basically fake us out here this morning. But if we do get that opportunity, maybe it ends up being the slightly smoother trading op while we wait for FOMC data here later in the day. All right, Apple, pretty weak looking green candle, weak volume, and a little bit of a gap up. So we'll call this a 2 out of 3 here to the upside without volume. Again, that does give us a two-way flexibility. Apple, same thing here, 2 out of 3 to the upside, without volume. So lower lows, lower highs, green candle. Microsoft, same thing. Actually, this is a 1 for 3 here to the upside, right? Green candle, decreasing volume, gap down. Amazon, 2 out of 3 here to the upside without volume. AMD post earnings, pretty small move actually. Pretty small reaction here post earnings, reasonable. That is a textbook 3 out of 3 here. Nvidia, it's gapping down 2 cents, so it's a 2 out of 3 with volume. Can't type. Meta, red candle, decreasing volume, gap up. So we're going to call this a 1 for 3 to the downside. Netflix, I'm every time I look at the Netflix chart, it always blows me away. I'm sometimes unsure where they're continuing to drive this revenue growth from. It's really impressive. We're gapping up 31 cents, so it is a 2 out of 3 to the upside without volume. And then Google, 2 out of 3 without volume. But like the general story, right, we're seeing in almost every single leading name is that it's not exactly a high conviction candle, right, or a very impressive volume bar. Everything is like clouded in indecision. So let's make sure, right, that we see a consistent narrative here prior to being hyper aggressive this morning. And then VIX hanging out 24.81. So again, right, implied range here today of like 1.5%. If we look at what the indexes have done here already so far, we're at what, 1%, maybe a little bit more than 1% of a move here already. So again, right, want to be a little bit cautious, a little bit patient here this morning, just to make sure that we're not getting caught up in that chop here today. I think it's gonna be one of those days where it's easier to get chopped out maybe than we anticipate, or easier than it seems in the moment. So I'd rather be like too patient and miss crappy trades than too aggressive and get stuck in crappy trades. And we'll see if we can kind of play that out here this AM. Any questions here, team? Everything kind of makes sense. For those of you watching on YouTube, everything looking good. No action in the chat here this morning, so everything okay. Like I said, I did a new microphone. Got a new microphone set up here this morning, so please let me know if you can hear everything. Yeah, looks okay in my opinion. So that's a great question, Rebecca. I think it's a twofold answer. So I think it depends on maybe threefold. So one, I think, well, let's start here. Everyone has a number that breaks them, right? So everyone has a number where they start to basically behave irrationally, or they basically lose their ability to be a logical trader. And that number is going to be different for everyone. And so I don't think that there's like necessarily a blanket rule from that perspective. So it would be about understanding what number for you, right, basically puts you over that edge of irrationality, and basically making decisions so that you can always stay within those kind of confines. Two, the second element here is going to be dependent on how much drawdown you have or what size account you're trading with. If you're trading with like a 50K account or less, then I think generally that probably does create environments where trading with minis versus micros, like you need to maybe have that conversation here with yourself a little bit more aggressively. Where if you're going to be trading minis on a 50K, you effectively need to have you basically just need to have a really good run of form, right, to be able to build up that momentum and build up that buffer. And so there's like a little bit of like a risk reward ratio there. And then the final kind of I guess like consideration, right, would be kind of based on that here as well, right? If you have a like if you're doing this like with a different drawdown rule, or you have a like a non end of day based drawdown. So if like you're trading with Apex versus Top Step, then you probably want to be building up that buffer above your trailing drawdown with with micros instead of minis, so that you're not punished, right, as aggressively if you don't take profit off at basically the peak of your P&L. So I think there's kind of like the three factors there that go into place. For myself personally, I don't change the sort of P&L structure or sort of my position sizing structure based on eval versus live account. Yeah, if anything, if anything, I'd probably be a little bit more conservative, right, in my in my funded account versus my eval account. But that's going to be a different risk reward equation for everyone individually. So good question. I think it's really just going to be dependent on a bunch of personal factors and sort of what your aggression / risk tolerance is during the eval stage. So there's I think like kind of maybe two ways to look at it, right? You either want to do it kind of conservatively and maybe take your time with it, right, and pass your account, or you want to be hyper aggressive and you want to maybe, or you're willing to maybe blow your account a couple times, but be able to pass it in like 5 trades, right? So figuring out which side you want to be on and being happy with that is something that's something that you kind of need to answer for yourself. So there's definitely just like a risk reward equation there. Hey Jenny, welcome from Shoreditch. London's a really awesome place. I hope you have a great time. Yeah, I hear that, Rebecca. I hear that for sure. Markets have not been very easy or very fun here recently. Or yeah, they've been fun, but they've just not been easy, right? And so buying yourself time to survive your mistakes, I think, is always a winning formula. And doing that with minis while you basically figure out your rhythm and your flow and you build up your confidence, it's not a bad thing. In general, I'm kind of a big believer in trading that you want to be the tortoise, not the hare. And if you're basically giving yourself time to learn how you survive your mistakes or how you can manage your mistakes, and then basically make it with your position sizing so that blowing up is effectively impossible, as long as you follow your rules, you're putting yourself in a much better situation here long term. And to a certain extent, I find that when I'm trading, I always build more confidence in my ability to trade when I make mistakes and then bounce back from them. And making mistakes with micros versus minis is easier to bounce back from because there's not like a double jeopardy element to it, or as aggressive of a double jeopardy element, right? So that would be kind of how I look at it. And yeah, if you want to send me a message, we can break that down a little bit more detail. But that would be sort of the starting point of how I view things. Oh yeah, Shoreditch is chaos. But if you're there, Jenny, they've got like, I mean, if you walk down, the high street there, they've got like some like the best Indian food in the UK, and they will be like fighting for your business as you walk down. So as you're walking down the street and you're looking to get yourself a nice dinner, you can literally negotiate for yourself extra perks, negotiate a bottle of wine, beers for the table, extra discount on food, whatever you want to do. So take advantage of that opportunity. It's actually pretty fun to do. And yeah, let me know how it goes. Shoreditch is awesome. And if you're there, you got to make sure you go to the Nightjar. It's like one of my favorite all-time cocktail bars. So enjoy. It's an absolute treat and an absolute pleasure. All right, so that's market open here this AM, guys. I'm just gonna go very quickly. Just go make myself a quick cup of coffee. I'll be back in 2 minutes. So just bear with me here for a second, and yeah, we'll jump back on in just a moment or two. All right. So I'm back. Sorry about that. All right. I mean, I'm still trying to figure out my morning routine here to a certain extent. Everything's just like a little bit chaotic still. Yeah, let's see how it goes. Yeah, now it's 6:30. Yeah, now it's 6:30. So like I'm not actually waking up that much earlier than I was before. Like normally waking up when I was out east around 5:45, 6 o'clock. The difference is like I had, 3 hours, right, to basically wake up, become like a rational human being, and to basically set myself up, right, to be nice and sharp here early in the day. I don't necessarily have that that same flexibility here at the moment, right? So I don't have the desire to wake up at 3:30 in the morning. So there's pros and cons to that. Yeah, that's something that I'm trying to figure out. Basically, my timing of like when to post the stream, when to log into all my accounts, all that kind of stuff. So all those things is like a little bit of extra chaos. So just figuring out that stuff is going to take me a little bit of time, but I have to say, like, and this is probably the primary reason why I wanted to go out west is like yesterday, right? Finished our trading day, did a few one-on-one calls, and then went for a hike at like 11 o'clock Pacific. And so I had like the entire trail to myself. I didn't see a single soul. And I almost like got to live like two lives yesterday. So from that element, I think it's really hard to beat West Coast hours, even if I got to suffer a little bit on the mornings, and my coffee intake's probably going to get dangerously high. But yeah, all good. I'm very, very happy. Oh, it's the best, Mike. It's so beautiful here. Usually, like you walk outside the door and you just see mountains everywhere. It's awesome. Yeah, 100%, Greg. And like in the winter, right? I'll be able to go do some ski laps and go play in the mountain a little bit, right? And have some joy there. And hopefully it'll be pretty chill and quiet in the summer, right? Be able to go do some bike laps when the park is open, or go hiking, or even go biking. And then, being able to play that round of golf when it's like 10 a.m., 11 a.m., you're gonna have the whole course to yourself. So for a hack like myself, that's a beautiful place to be. All right, so far a pretty bouncy start to the morning. NQ, right, little fake out higher. ES, a little bit of a fake out lower here potentially, right? A double little fake out there lower. And then CL, big candle down, big candle up right away. So it's maybe a little bit of a slow start here this morning. Now, we anticipated this, right? It's kind of our base expectation here today. And again, I want to be probably a little bit more cautious, a little bit slower in how I let trades develop here this morning. and just wait for those opportunities where I can get that really tight risk and then look to have some joy. So, what I don't want to be doing here generally when I'm trading is widening my risk to basically account for volatility. I'd rather wait things out than to increase my probability of taking a larger loss than I expect. And yeah, I don't think it's a surprise that our best trade there yesterday was also the one where we had our tightest risk. Again, right? Basically, just rewarding those good habits is going to be the key here for the next little bit. Yeah, Deb. So I opened up this Trade account with TopStep yesterday specifically for this purpose. So the call it family account or whatever you want to call it, right? Started at scratch there yesterday. As for my other accounts, I've got about a little bit over 17K worth of drawdown available to them across the board. So if you watch that video, Deb, I show you basically my entire Trade account, right? So you can see my balance in that video, and you can see all my executions and things along those lines. So, if you want to review that, all the information is going to be there for you. Okay, so NQ possibly breaking out here. Let's see. We want it to close above the previous high a day, right? So it'd be 921-ish. Doesn't look like it's going to do it. So no signal there. So we'll just pass on this burden, right, of confirmation now to the 5-min time frame and go from there. Ooh. How's everyone feeling this morning? Everyone feeling sharp? Everyone feeling good? Beautiful. Good. Good to hear. Yeah, a little bit of a nasty open. I would agree, Robert. Kind of fake outs in both directions here, but if we can get a nice textbook breakout on some volume, yeah, I'm gonna be happy. Now with 15 seconds to go, I think it's unlikely that we get that increasing volume standard. So we're sort of getting the markets are kind of forcing our hand here to a certain extent, which I'm not going to complain about here too much. If it doesn't want to give me a clean signal on a day where I'm not expecting a clean signal, that's kind of a win. I don't know. We'll see. Yeah, and so right, not an increasing volume standard there. One sec, I gotta charge something. Give me a moment here, guys. So yeah, so far no action here. Nothing really setting up yet. Just kind of looks like chop across the board. It's fine, right? Not the end of the world. Again, I don't think I'm going to get the increasing volume standard that I need here. On CL, I do. And like instantly, it kind of gives me a intra-candle gap down, which I'm not super thrilled about. And maybe I could do this. Would have to be the aggressive technique here now. Let's watch. I'm probably anticipating this to be a little bit of a fake out still. Woo. There's that tape bomb, Robert. Wow. For lack of a better term, fuck you, bulls, right? With that type of move. Holy. Yeah, that's a lazy trader executing that one. Just bammed a massive market order. Oof. All right. So again, right, that's a nice increasing volume candle, but we needed to break down here through low of day. That didn't happen, right? And then on NQ, we didn't hold a breakdown through there through low of day. So we got some continuous evidence, right, of like it being a shake and fake type market. Again, on CL, right, we did a good decision there, basically understanding that, hey, a fake out was probably likely. We got that big fake out. Now maybe it wants to give us like a cleaner resolution. The thing that's bothering me a little bit about CL is that we keep kind of opening up candles with like what kind of looks like a gap up or a gap down, right? So there's either like missing data packets here, maybe some extra latency on the data, whatever you want to call it. But generally, right, these candles should be opening up at the previous candle's close. We're looking at so many of these candles that aren't doing that, right? They're opening up a couple pennies, right, even above or below. So that makes it a little bit challenging to want to trust. What that generally means, right, is that basically a big market order generally got spammed basically right at candle close. And so it creates some kind of funky looking shapes here. So not for me, right? I would say in the short term, I would rather be just a little bit more patient than that. And yeah, not seeing much of anything here yet this morning. Kind of a gross start, actually. This is a textbook: one candle up, one candle down. Okay, again, crude may be setting back up for us here. Let's see. So let's focus on crude. This is probably the best looking of the bunch. Okay. So strong candle close there, right? Good candle shape. Let's box this thing in. So from profit target to stop loss, right? For now, we're looking at a pullback entry technique. So a stop loss of, now would be the aggressive. So stop loss of 58.99. Got about 5 cents worth of risk. Pretty reasonable. And my entry target here, right, or my limit price would be set at 59.04. So let's watch this reaction here as it pulls back into that entry zone. And the stop loss would be at 58.99. And so let's see. No rush, right? No rush on wanting to enter this position. Let it be chill, right? Let it be chill. Okay, so now, right, from a CL perspective, I have to walk away from this trade here on the 3-min time frame because I can't justify an entry here on the aggressive technique, right? I don't have the risk reward that I would like, and I haven't seen the high of my confirmation candle act as support. So, a couple cent pullback right within that range would be reasonable. But now seeing it pull back this much, it becomes far less satisfying, especially now that it's under also that 59 handle. So again, we'll just pass on this burden of confirmation to a longer time frame, and we'll see if it can set back up here in a few minutes. And fuck, this might even set up here as like a rejection or reversal, clearly on pace to be larger volume than our confirmation candle. Oh, wait. Okay, so now we can look at CL here to the downside. Again, right, immediately we know it has to be the aggressive entry technique because it made a lower low through our confirmation candle. So we're trying to see if this basically lower low, right, that blue line, acts as support for a downside continuation narrative. So you'd be looking at a 58.94 stop loss for this short. You'd be risking about 5 cents, right, or five contracts. Sorry, 5 cents. You could be trading up to 10 contracts on this. I'm going to keep it sizing just a little bit smaller here still. I'm not going to be hyper aggressive. I've seen fake outs in both directions, so I'm going to allow my position sizing to work in my favor here. So let's see again, right? We want to see that blue line act as our support here for a downside move. I don't know if I've necessarily seen that elevator upstairs down, or I should say elevator downstairs up here yet. So I'd rather be patient and slow than too aggressive here this morning, right? Yeah, I just said, Deb, 5 contracts. Hypothetically, right, I could go 10 contracts on this if I wanted to. But I want to keep my risk tight, right? And allow my position sizing to work for me, not against me when I'm seeing a choppy backdrop. So this is effectively would be a half risk trade. Okay, so watching here carefully. Let this candle close. Let this candle close. Okay, close. Okay, so watching for a little pullback here. Just, it does feel a little bit sticky still. Kind of a gross analogy, but it does feel a little bit sticky. Okay, so still watching here. Like the elevator down is going down like 1 or 2 cents. That's what's giving me just a little bit of hesitation, I think. Because like it looks strong and then it hits a wall. To a certain extent, right? We've kind of seen one algo positioning trade higher, one algo positioning trade here lower as we're going into data at 10:30. Maybe if I'm putting together all the pieces of this puzzle, it's telling me that's hard to trust this as trending PA. But again, that's a lower low, lower high, back-to-back candles. So it is some bearish characteristics. I think even if I was in this trade here so far, which I'm not, right? This would have been a very tough 3 cents. Yeah, I can't help but think that a fake out higher high is still coming. Just sitting here in darkness, watching price. Let's see. So back within that range here. Nice work, Rebecca. Congratulations. Definitely a good rejection. Excuse me. Okay, so now it's an increasing volume standard. I could start to look maybe again, right, for the aggressive. Ooh. Didn't even finish my sentence there before it did something screwy. Yeah, well, I think we had the good read on it, right? I think I said 2 minutes ago, I still feel like this is going to fake out. Boy, did we nail that. Oh my gosh. There's that meme of like it's like, oh, like you should go ask out that girl, like what's the worst thing that she can do? Like the worst thing she can do is just say no. And then the worst thing, right? The actual result is just this massive fake out here, lower than higher. Like, oh, the worst thing it can do is stop you out. This is what it looks like. So good decision to have not taken a trade here in either direction yet. As frustrating maybe as the price action has been. All right, so far so chill here. Okay, NQ, probably not enough volume there. Didn't hold above high day, so I don't think I can compromise on the volume. So again, I'm going to pass this burden of confirmation here onto a longer time frame. And effectively, right, needs to close above that blue line there. And on ES, right, needs to close and hold above that blue line on increasing outlier volume. So we should get there from a volume perspective, right? I think. That was a nasty candle on CL. Nasty, nasty business. So let's see if it can hold above. Be close. Ooh, right on the skin of its teeth. So it did hold above. I'm going to be okay looking for the aggressive entry here. Or maybe the pullback. Let's see. So we need an entry right around that 31 area. Ideally, though, aggressive technique would be better. Okay. So 937 stop loss. Can you rephrase that question, Deb? Okay, so pretty tight risk here. Looking at a 937 stop, right? 937. No trades here yet, Cole. No trades here yet. Just looking at our first opportunity here on NQ. If I take a trade, that'll always be reflected in the setup alerts channel there on Discord. So a 937 stop loss is what we're looking for here. And we just want to make sure that we're getting the correct reaction above this blue line, right? We've seen fake outs galore here in both directions. So base assumption here, right, is it's a fake out until proven otherwise. And we want to make sure that we're getting that appropriate reaction from price prior to us jumping in. Okay, so that would now push stop loss to be 935. A little bit lower. And that would change my position sizing too, right? That would be pushing me to 2 contracts, not 3. Again, though, still not getting that correct reaction above. We keep seeing that blue line kind of act as like an area of resistance here so far. Still no reason to have jumped into this position. Again, right? Base assumption here is fake outs until otherwise. So yeah, market conditions here right now are not different than market conditions have ever been. Markets are always the same. They've always been like this, but markets behave seasonally, right? So there's times where price action is trending and there's times where price action is choppy, and it just cycles between the two environments, right? So, yeah, there's nothing new in trading. There's no new market conditions. There's no new setup triggers. There's no whatever. It's all the same. But there is like a cyclical nature to how markets move or how markets behave. And yeah, sometimes you have good conditions, sometimes you have bad conditions, sometimes you have conditions that suit your strategy, sometimes you don't. Now this would be a one contract play, right, at 9:30 with a stop. Okay, still watching here very closely. I'm going to let this candle close as well. I think we got 15 seconds on it, 10 seconds on it. Okay, so watching. Again, this is one contract, right? One contract. Okay, guys, I am in. Average price 945.75. Almost instantly in the red. There we go. Let's see if this thing can now go. Stop at 9:30. Hmm. All right, I got stopped out there for minus 319. This is just a classic fake out here, I think. So can I potentially try this again, but that was a bit nasty. Ruthless. Again, I'm going to try this again here potentially. So mean. Literally faked me out and then jumped right away. That's brutal. All right, here's possibly the entry opportunity again. Oh, I didn't get a fill. Gonna cancel. $927, right, would be the stop. All right, so I'm back in 944.25. 944.25. Stop at 927. Same thing, right? Only one contract here. And let's see if this thing can go. So far, so good. But it's got to break out here. Got to break out. Hmm. Gotta go. Gotta go. Hey, come on. Make higher highs here. That's what we need to see. Come on. All right, so it's got to hold these higher highs, right? It's got to hold these higher highs. Much, much better. All right, keep going here, baby. Keep going. There we go. Okay, guys, I have closed there at 963. I have closed there at 963. Actually, 962.50, out at 962.50. Cool. Back to green here on the day. I'm not sure how ES would have been jammed by VWAP there. Robert, VWAP's underneath, right? So it's acting as support more than anything else. I'm not sure if I understand where that comment's coming from. And again, right, if this trade is strong, it'll give me another chance here to enter. But the little fake out, like that my entry wasn't correct right away and it pulled back lower, flirted with my stop loss, and then gave me a chance to get out. I got to take that chance 10 times out of 10. If it's strong, right, I can reset like it's maybe giving me here, and I can look to play this continuation move without missing anything. But that flirted with pain, right? So I don't want to deal with that. And sweet, right? I'm up $41.44. Hello. Hope you guys like ramen. And a good decision, I think, to close where I did. But VWAP is underneath, right? So VWAP is here at 56.44, Robert. So how can it act as a wall above if it's below current price? That's where I'm confused with your statement. So you're using pre-market data then to adjust for your volume, which is different than what I use. So I'm going to ignore that analysis. I personally don't really use VWAP. I have it up here because people reference it a lot, but it's not something that is really important to me. So stop here would have to be 948.75. So again, just call it 948. What I want desperately here, right, is good entry timing. Because on that last trade, I think both of the trades I've taken here so far this morning, the thesis has been solid. It's the right direction, but the timing hasn't been perfect. And that's made the trades just a little bit more difficult than they need to be. So we can keep watching this again here, right? Looking for that blue line to act as support. Okay, in general, right, all indicators are, every indicator is a interpretation of price and volume, right? So my bias when I think about indicators is to become a master at studying candlesticks and volume. And then you can look to use other alternatives, right, to beef up your information. But I don't want to rely on someone else's interpretation of price and volume when I can make my own analysis. So why not just go directly to the source, right? Is kind of what I mean by that. Because I can find an indicator to tell me any variant of any story that I could possibly want. And all that does for me, right, is it creates analysis paralysis, and I get confused over what I should be doing because I can find effectively confirmation bias, right, to either get in or get out. And I don't think either of those scenarios are particularly fantastic. I focus on candlesticks and volume, and I use those to be my setup triggers or my, definition of how strong price action is reacting. Everything else that I add to it, right, is no longer back-tested information that I have any reasonable form of data on. So I've tested my strategy using those core techniques, and adding extra variables here now actually deviates me away from what I've tested or what I've studied or the patterns that I've noticed. Well, I don't really consider myself a indicator trader. All the indicators that I have made are custom indicators, right, based on patterns that I've seen that I've used to basically be able to backtest my strategy. No, only losers add to losers, Cole. I refuse to average down. You want to be adding to your winners, not adding to your losers. And we can look at this on the 10-min time frame here potentially. Because here's the thing, right? If your entry timing is wrong, what else about your thesis are you wrong about, right? Because you click submit when you think that the trade is about to run. So if you were wrong on that analysis, why are you so confident, right, that your thesis is still correct? Like on that trade we just took, right? My entry was what, 944 or something like that. And I wasn't correct right away, right? I flirted with my stop loss. So the first time it gives me a decent amount of little follow through, right? Kind of gives me that 1R move. I'm looking to get out because my confidence that my idea is correct has deteriorated here to a certain extent. Because if I was correct, my entry would have been green right away. So if I'm dealing with a bad entry timing, I don't want to now assume that my thesis is still spot on. I would rather take the small loss and give myself a chance to re-enter if it gives me another opportunity to do so. So like here, right, I potentially have another opportunity to jump in for a long on this 10-min time frame, targeting a move towards 2031. So if a trade is strong, it'll always give me another chance to enter. I don't need to basically go all in or all out on a single decision. Again, we closed this trade at what, 962.50, right? So objectively, I've not missed anything here yet. So yeah, I feel okay with how I've seen markets here so far today. So 18 points of risk on this trade, right? So it'd be a one contract play here again. I mean, CL is an absolute disaster, so good to see us avoiding that mistake. Kind of a wacky and wild morning here again. How's everyone feeling? Everyone feeling okay? Um, so that's an interesting question, AJ. Very interesting question. Like 20,000 right now would be a 1 hour move, right? Based on the current entry. So that is enough space reasonably to get up and over through. Again, I'm gonna kind of go back right to that same VWAP discussion, right, that I just had. So when I'm back testing this idea or I'm back testing this trade, I wasn't back testing, right, it getting stuck at a round number. I was back testing of did it get to the 2R line or not, right? So I don't want to add or impose more restrictions on myself, right? When that isn't necessarily information that I've tested for. Well, I hear you, Deb, but if you just focus on your position sizing, right? And that's how you're going to get yourself out of your drawdown hole. When we make those kind of position sizing mistakes, right, then we tend to only get the downside of it. So something to really focus on here. So yeah, I feel like I still have not missed out on any move here today. Been a reasonable approach. And again, not a banner session by any means, right? Like I said, it's only 40 odd bucks here. Yeah, well, that's based on crude oil inventories, right? So that's that 1030 data that dropped. So I'm not super interested in getting stuck in that algo backwash. So I'm going to be still a little bit pessimistic about the ability to execute cleanly on CL. Yeah, again, a good decision I think to get out where we did. All right, guys, give me a second. I'm just going to go top up my coffee. Give me a moment. All right, I'm back. Sorry about that. So yeah, just like the size of these wicks here on CL, right, makes this borderline untradeable for me. So I got to stay away. And this is maybe a little bit interesting. Kind of like that low vol pullback thesis. We played this similar concept yesterday. And if we want to be hyper conservative, right? We talked about that 20,000 before. Then you just make that your target. Now, I'm not going to do that. I'm going to keep it to be that 2026. But NQ looks interesting here on the 3-min. And this is the low vol pullback thesis, right? So high vol breakout, nice little separation, low vol pullback, right? Kind of halfway up that range. And then it's also giving us, right, that second most bullish candle on increasing outlier volume. So here's your high vol breakout, right? Low vol pullback candle 1, low vol pullback candle number 2. Confirmation, right, that bulls are back in control as candle number 3. So let's watch this a little bit. This maybe is the most likely at the moment. Let's see. Okay, so let's see if this support holds. And it's pretty similar to what we had there yesterday, right? As our last trade of the day, where it was basically a support zone, right, inside our price, similar to what we did, right? We had that support zone here that we looked to play off of, and that was the entry. So very similar concept here. Just trying to wait for this appropriate reaction. And again, right, another one of these days, or I shouldn't say another one of these days. It's talked about this at the start. I would rather miss trades here today than jump in too aggressively, right? So saying that out loud reminds me to slow my process down and to not get like tunnel vision on a individual setup or individual look. Yeah, good decision, right? Assume that it's going to fake you out until proven otherwise. I'll wait this thing out for now. So look at these wicks. It's disgusting. This is a very indecisive market. I think one of the important things to realize as a trader, right, is that you develop a system so that you don't have to think, right? You develop a system so that you can effectively react to price action in front of you, not to think, hey, is this giving me the look that I want, right? So the idea here with our technique or with our strategy or how we're looking at price action in general is we're trying to make as many of those variables binary, right? Strong candle shape, strong reaction, right? Appropriate risk reward ratio, yada, 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 yada. Well, whatever variant, right, of the process that we want to kind of expand towards. Because once I start to make decisions like, oh, it feels like it's going to do this, or I think it's going to do this, or XYZ. Now I'm starting to attach like a emotional reaction to something that is not supposed to be emotional, right? And once I start to make those decisions with that like emotional foundation, that's when I'm most likely, right, to compound mistakes and make decisions that I'm not particularly happy with. So those become scenarios, right, where I take trades and maybe ignore my profit target or ignore my stop loss or go too big on my position sizing or average down into my entry, whatever it might be, right? We all have a different variant of what our bad habit is once we start to make an emotional trade. So our objective, right, is to avoid those variables by being systematic in our process and systematic in our technique so that it can be black or white, right? Either my setup trigger happens or it doesn't. Either my confirmation happens or it doesn't. Either it pulls back into my entry price or it doesn't. Either it gives me that elevator downstairs up or it doesn't. And so if I can make those processes more binary, it is so much easier for me to maintain mental capital and to basically remain a rational trader. So, and I don't mean to call you out on this, Ajay. This is kind of something that sticks out to me a little bit, but I'm a big believer that the language we use to describe our problems becomes like the benchmarks, right, under which we solve them. So if I'm telling myself that it feels like price action is going to go a certain direction, I'm starting to attach an emotional reaction, right, to something that maybe isn't necessarily super logical. And so then I make it easy, right, for me to have an emotional reaction to either positive trading result, right, or a negative trading result. And I kind of force myself to get back onto that like P&L roller coaster. And the more addicted I get to that sort of reaction or that sort of sensation, the harder it is for me to, yeah, basically execute my technique, right, and to be as impartial as I can be. All right, so clearly, right, we have a breakdown scenario here. High volume rejection, nice little breakdown, right? Mega candle that broke down through our entire bearish range, sorry, our bullish support range. So this would be very, very interesting, right? And it's a fake out high volume confirmation. It's not quite outlier volume, but it's bigger volume than anything that we saw sort of inside that reasonable range. So I'm interested in this for sure. It'd be a 927 stop loss here on a short. And he needs to be above 910, right, as an entry. Might have just missed my chance there. Fuck. I see no evidence of 1900 acting as that phantom area of support. We're going back. We're spinning in circles here, team, right, a little bit today. Because we talked about, right, how I'm not going to add a random level at 20,000 in the middle of my opening range because I have no back-tested evidence to suggest that I should do that. So I'm now not going to apply a random level here, right, in between, just because it's a round number. So we're spinning in circles. We're talking about the same things here over and over again. We got to apply, right, those differences here to our technique as well. It can't be... We can't look to talk ourselves out of our A+ setups, right? That's not appropriate. So don't complicate things, right? Keep it simple. As long as I'm within my opening range, I'm either targeting the 2R level or high of day or low of day, right? I'm not looking to add in extra variables because it just creates analysis paralysis, right? And yeah, well done, Mike. Congratulations. Nice little 57 points. Let's go. Again, guys, right? We can always find a reason to talk ourselves into a trade, and we can always find ourselves a reason to talk ourselves out of a trade. We don't want to complicate it, right? We've back tested certain parameters. So it's our job to execute those parameters as best as we can. Adding extra variables, right? Adding extra reasons to get out means we're no longer executing those parameters, right? And we're no longer trading that same strategy. So don't talk yourself into gambling on something that's different. It's not worth it. Okay, so I'm watching here again, right? We're using previous low of day here as our implied area of support to a downside move. And price action didn't respect, right, that 900. It didn't give a shit. So don't add extra variables for yourselves. It's really not worth it. Game is hard enough as is, right? Don't understand your question, Cole. Please rephrase that. Okay, so I'm watching here, guys. I am watching here. Stop loss would be 19,874. One contract, right? Oh, motherfucker. And I could do this here, right? 862 stop. Yeah, it's a different tier of the service. Please contact your DTR advisor if you'd like to join that instead of just participating on the trial. So 19,862, we'll call it, right, as our stop loss. Again, one contract only here, only one contract. Okay, watching here very closely. Okay, guys, I am in short 845. In short at 845. $845 on the dot. One contract. Okay, so far so good here. So let's see if this thing can keep breaking down. Give me a nice flush. So watching closely here, right? Here we go. This is bouncier than I would have liked. Gotta die here, gotta die. Come on. Oh, kind of a disaster candle breakdown here, baby. Come on, go, go, go. I hate how bouncy this is. Oh, it's got a flush here. Got a flush. Come on. Here we go. All right. So watch if it makes a lower low here. And then I'm going to try to maybe get out of this position as my P&L is increasing. Beautiful, 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 beautiful. Hey guys, I am out. I am out. Exit price 814.50. 814.50. Beautiful. And that puts me at 647 here on the day. Great trade, team. Great, great trade. Let's go. Yeah, and we had to fight for that a little bit, right? Yeah, cool. Reach out to your DTR advisor. They'll get you set up. So again, guys, right? Today's a little bit of a lesson. Don't create extra barriers for yourself when that isn't necessary. Right? We trade our system. No, and Ajay, right? I'm not trying to call you out here specifically, but I think that's just something that we all experience here as traders, right? When you like your brain plays tricks on you and it tries to make things more difficult than it needs to be. So the counter to that, right, is to basically just be like just really rigid with your process, really rigid with your rules, and just learning not to apply extra variables to that, right? So like if I think traders go in two directions. They either get too aggressive, right? And they start taking trades that they shouldn't take. And then the alternative, right, is that they go too conservative, right? And they talk themselves out of trades that they should take. So it's not an issue, but what I'm trying to do in that circumstance, right, is basically highlight to you that you're adding maybe out of fear, right, out of anxiety, out of whatever, you're adding an extra barrier that doesn't need to be there. So like trading is hard enough as is. You basically just don't want to complicate it even further. That makes sense. So I'm not mad at you or anything along those lines, but for me, it's just important. Like at least when I think about my own trading, the more that I could recognize those patterns in the moment, easier it is for me to adapt, learn from them, right, improve, and avoid them in the future. So you making that statement was not a negative because I imagine a lot of other people were feeling that same sensation or had that same sort of idea running around in their head. So it was important to me, right, to basically be able to address that, hey, it's just a number on a screen or it's just a random piece of information. And I don't want to add more variables than required. So redeemed LED. Send me a couple screenshots of your trades, right? Of maybe why you made some decisions, and I can maybe give you a bit better feedback than that. and be able to help you out within that context there. And again, I think we made a really good decision to close this trade where we did, right? I got no issues with that. So it didn't quite bottom ticket, but within like 7 points. Yeah, absolutely. So you can see this arrow here under or above this red candle, right? So what that is telling me is that I'm getting an opening range breakout on increasing outlier volume. So based on my strategy document, right, that's this high vol breakout here, targeting to move down towards sort of the previous low. So what markets are telling me, right, is that we're getting a consolidation breakout, and that consolidation breakout is happening with a really strong volume profile. Looks like the second strongest volume bar of the day, and then a really strong candle shape. So just based on my setup trigger, I'm getting that high vol breakout scenario, and I'm looking for a continuation breakdown or for the next couple candles to be red bearish candles, and looking for that story. So just a textbook high vol breakdown setup, and I was happy to execute it the way I did. So it was a system play, Aaron, an absolute system play. How's everyone feeling? Everyone feeling good? So you can see this white line here on my screen. High volume is two things, right? It needs to be bigger than the previous bar and larger than the white line. So it needs to be increasing, right? So i.e. bigger than the previous bar, and outlier, which is above that 20 volume moving average. Oh, that sounds fantastic, Kiki. That's a dream day. Go for lots of pup cups. Beautiful. What was your setup candle, Ajay? Nice work, Herschel. Oh, this job is so much more fun when I finish the day green. If only I could stop. Well, I know, but you still need confirmation, right? So low vol pullback is fine, but you need that confirmation that bears are back in control. So if it was to be a low vol pullback, right, I'm gonna draw it out here. It would have to be like a candle like this, and then a big red candle back right down. So it'd have to be weak green candle, right, pulling back towards the opening range, and then a bearish confirmation candle, right, indicating that bears have reclaimed control after that weak attempt from bulls. Does that make sense? Yeah. So it's basically, okay, we've got a bearish trend, right? Now we've seen weak bulls try to reclaim, they've failed. And then we see bearish support basically get established in that previous breakdown range. And we would anticipate that the bulls that were defending that thesis are pretty weak and pathetic, and we can just wipe them out like they're nothing. And truth be told, guys, we nearly bottom ticked that trade, right? We absolutely nearly bottom ticked that within, 14 points of it. Realistically, that's pretty good. That's really good. So good day here. I don't think I'm going to place any further trades. Yeah, so in general, Aaron, I pretty much only trade like the first 90 minutes, maybe 2 hours of the trading day. I trade momentum concepts. So momentum tends to be most available in the market kind of in that first, 90 minutes to 2 hours. Outside of that, honestly, I just go enjoy the rest of my life. Yeah, like I to a certain extent have built my trading strategy to kind of be like a lifestyle trading strategy where I am effectively optimizing for freedom, not necessarily for max P&L. So I could spend all day here in front of the chart watching, trading, doing whatever. But I don't think that it actually make me a better trader or make me enjoy the quality of my life. Yeah, this thing has been, for lack of a better term, kind of a fuck you today. I'm kind of happy that we've avoided this mental head case. Yeah, no, Aaron, like, yeah, the way I trade, I'm looking to take advantage of momentum first 90 minutes of the day, get my good opportunity or whatever, and then, yeah, go enjoy the rest of my life, right? When I quit my hedge fund job, I basically decided that I wanted to optimize for freedom, not necessarily for like an incredible career or whatever you want to call it. Like I make more than enough money. I'm happy with sort of my income level, but I made a ton of money working institutionally, right? But I was working like 80 hours a week, maybe 65, 70 hours a week. And so I was making all this money, but I couldn't do anything with my time. Like by the time my workday was over or like my weekend was over, like the only thing you would do is go get really drunk with your buddies and then, maybe go for like a dinner or something like that. And you just wouldn't do anything too interesting. And so I felt like really burnt out from that. So when I went self-employed, I decided to optimize for freedom first, finances second, and that's actually helped me make a lot more money than I would have expected. Now, truth be told, it's taken me took me maybe 5 years to kind of get back to the same sort of income level that I had when I was working at Arain. But the quality of life is so much better, and yeah, I have no regrets over making that decision. So I trade for that 90 minutes. I go enjoy the rest of my life in the remainder of the day. And that for me is a much better work life balance. So just CL here in general, right? We had market data at 10:30. So crude oil inventories at 10:30. Generally, when I have that midday data, I want to be pickier effectively, right, on when I'm looking to take a trade because that data at 10:30 is going to more or less set the tone for the general market. So the action that you historically get in between those moments is more like a positioning trade than it is a trend day. So it just makes it really hard to trust the signals that I have. So if I'm like looking back to my trading here in general, I don't think I've placed a crude oil trade on CL inventory day before the 10:30 data in the last year at the very least. So it's kind of just become a habit to avoid trading it well on inventory day. And in general, I would say that I treat CL kind of like my mistress. NQ's my wife. ES is my girlfriend, and CL's like the is the mistress. That'd be kind of how I describe it. Yeah, exactly. Yeah, ex-wife. Yeah. Sometimes if you trade it on crude oil inventories days too much, you end up giving her just a lot of alimony. All right, team. Any other questions here today? Anything else we can go over? Pretty happy with today's trading day. 2 for 3, I think, right? Yeah, it is. So it's if you just double click your volume, it's the volume MA. Then I've just changed it to be this color and this thickness. I like my white lines thick. Sounds good, Aaron. Have yourself a great day, man. If you're inside the Discord, there should be a couple videos there in the trading doc tab that kind of breaks down my setup and my strategy in a little bit more detail. So if you're interested in reviewing that, I would go through some of those documents here at some point, or those Loom videos, and yeah, really kind of get up to speed. Yeah, no worries. I can be a bit like a parrot in here sometimes. I repeat the same stuff over and over and over again. But for me, it's the repetition that makes me money. All right, team. So I'm going to go final call for questions here. Final call for questions. Final call here, team. Final call. Manji, I saw you typing something. Don't hesitate to ask, man. Yeah, Matt. You can either reach out to your DTR advisor. So Logan at dtrtrading.com, or you can send me a message on Discord, Michael DTR, and we'll get you set up. Yeah, P&L on the day here today, Deb, 647.16 per account. 647.16. Any other questions here, team? Any other questions? Sounds good, man. We'll catch you tomorrow too. Truth be told, I'm pretty happy with how I traded here today. It was a really really good process day. So what I mean by pyramid, right, is it's like it's about keeping my position sizing small to start, right? So that's all that it means to me. Yeah, it's that my base position sizing is small. The idea, right, is those are opportunities, right? Or those are the types of setups that if I get the right follow through, I get the right action, I'd be happy to add to my position sizing once I'm green. But just in the short term, things are pretty choppy. I could probably phrase that a little bit differently. I've not put too much thought into that, truth be told. But yeah, I don't know, is what it is. Cool. So P&L graph looking pretty healthy here, right? No complaints. And yeah, we'll see how things kind of continue building out here and going for it. So no complaints. Yeah, guys, we managed the day really well. So same deal like always, right? If you have any questions, hit me up outside of market hours. I'll do my best to get back to you as soon as I can. Just like yesterday, right? I'll post another recap video here at some point this afternoon, probably once my day is done. And obviously show you guys my executions and all that kind of fun stuff. But yeah, good job here today, team. Well done. Nice to kind of be finding our rhythm and our flow again. Definitely starting to find my momentum a bit right after like a week off. So feeling sharp. Voice is feeling a bit weak here though for some reason. So I got to figure that out. Maybe it's the new microphone. But yeah, no complaints here, team, right? Really well done. happy with today's trading day, happy with how we managed our risk and some of the opportunities that we took advantage of. Don't think I really left too much money on the table here. And there maybe were a couple trades I could have taken that I didn't get necessarily in, but they only gave me like I only had one chance to enter them, right? So it was like opportunities where even on like that 900 breakdown, it basically tested once and then flushed. So it wasn't necessarily exactly what I would have wanted to have seen anyway. So I've got no problems with being a little bit patient here and a little bit deliberate. So all things considered, really strong session, really strong day. And yeah, looking to keep kind of compounding away on what's starting to turn into a good week here, right? A little bit of improvement, right? A little bit of things to focus on and just improving my technique here on a daily basis. Today has been the best trading day of the week from a technique perspective. Better than Monday, better than Tuesday, right? And I like that, right? That's that 1% improvement kind of visualized here to a certain extent. And I've been happy with sort of the work and the progress that's been made within those contexts. So all things considered, happy days here today. No real complaints. Glad to be nicely green and proud of the team for also managing to trade a relatively choppy market with a decent amount of precision here this morning. So same deal like always, right? If you have any questions, hit me up outside of market hours and I will do my best to get back to you as soon as I can. Otherwise, have yourselves a fantastic rest of the day and I'll talk to you guys all tomorrow. Peace.